Eligibility for the VA loan is defined as veterans who served active duty and have a discharge other than dishonorable after a minimum of 90 days of service during wartime or a minimum of 180 continuous days during peacetime. There is a 2-year requirement if the veteran enlisted and began service after September 7, 1980, or was an officer and began service after October 16, 1981. There is a 6-year requirement for National Guards and reservists with certain criteria, and there are specific rules concerning eligibility of surviving spouses. Check out our website under Resources and VA Links. Let's look at how entitlement can be used to obtain a VA loan. Single vet can include joint spouse. Dual vet is split entitlement of 2 vets. And non-VA cosigner is allowed by some lenders, but requires a 12.5% down payment. Surviving spouse of active military or military widows may be eligible for a VA loan if the veteran was rated totally disabled or eligible for compensation prior to death by any cause.
VA will guarantee a maximum of 25% of a home loan amount based on the conventional loan limit set by the Federal Housing Finance Agency for a 1-unit property when the veteran has full entitlement available for 100% financing. Unused entitlement can also be used in some cases. It's not very common, so I won't cover it here. Let's look at the pros and the cons. We'll cover the pros first. The VA loan program offers a 0% down payment with no annual monthly paid mortgage insurance premium. Credit scores as low as a 620 are acceptable with minimal impact on the interest rate. There are no cash reserves required, and the spouse can qualify jointly with the veteran. There is a 2-year wait period after a bankruptcy discharge, a foreclosure, deed in lieu of foreclosure, or a short sale. There are non-allowable closing costs, which can lower the cost that the veteran has to pay. Interest rates are lower than conventional loans, and the loan can be assumed upon approval from a VA lender. Now let's look at the cons. The VA loan is for qualified veterans only, purchasing a primary residence only. Just like FHA, condo projects must be HUD approved. You can find the link to the HUD-approved condo list in the resources section of our website. A higher funding fee is charged when the VA benefit is used more than once, and the appraiser can require health and safety repairs, just like FHA. Any default on a previous government loan can disqualify you. So what are the allowable closing costs? The loan origination fee of 1% of the loan amount is allowed. This fee can be charged by the lender to cover administrative costs for processing the loan. The lender may charge this flat fee or itemize the fees not to exceed 1%. Depending on the loan amount, the 1% origination fee may not cover all the non-allowable closing costs, in which case they could be paid by the seller and negotiated in the sales price of the home. Let's look at the other allowable cost. The loan discount points, which is used to buy down the interest rate, can be charged. The credit report is allowed, the appraisal, all prepaid items including hazard insurance, the VA funding fee, title insurance, recording fee, flood certification, and the MERS fee are all allowable VA charges.
The buyer can also negotiate for the seller to pay a portion or the entire amount of the closing cost, not to exceed 4% of the loan amount or the actual cost. Buyers cannot receive cash back. It's important that your lender and the real estate agent know your specific needs so the purchase contract can be written correctly.
VA has a funding fee that can be financed into the loan. The funding fee is how VA guarantees the loan at 100% financing, similar to FHA's upfront mortgage insurance premium. The funding fee percent varies depending on the first benefit used or the subsequent benefit used and the down payment as seen on this chart. Disabled veterans can be exempt from paying the funding fee altogether. Interest rate reduction loans, which are streamlined refinances, only have a 0.5% funding fee, but cash out refinances share the 5% down rules.
VA calculates income using traditional DTI ratios plus an additional residual income formula in order to ensure that borrowers will have enough income to pay their basic living expenses like utilities, childcare, etc. Calculations vary based on the family size and what part of the country you live in. VA offers a 30-year or a 15-year fixed-rate mortgage and a 30-year adjustable-rate mortgage for both purchases and refinances. VA will finance single-family residence, townhouse, condo, manufactured home, and a duplex if one unit is owner-occupied. The lender orders the appraisal through the VA portal, and the appraiser must inspect the property's condition as well as determine the value, similar to FHA. You can find VA's minimum property requirements on our website under Resources and VA Loans. And that covers VA loans.
Thank you for watching, and here's how you can help us. First, share us with your network on Facebook, Instagram, Twitter, and YouTube. Secondly, tell your family, friends, and coworkers about us. And lastly, we are publicly funded and need your help keeping our videos free by clicking on the Support tab today. Don't miss the Tips and Timing video, found only on our website, for all the ways that you can save hundreds of dollars when buying a home.